Morning.
Morning.
How are you, Gerardo?
How are you, Leo?
Good, can't complain. Eh, Happy Monday. Yeah,
How's everything around there? Better now?
yeah, we were lucky. We didn't get anything here. Yeah,
Nice.
yeah, yeah, the other coast is very bad. Oh, horrible, terrible.
Yeah, I was seeing some pictures and it was
Yeah,
real bad.
yeah, the West Coast. Oh my gosh, especially the area. I know that area very well between 4 miles, around 4 miles. Oh, wow, wow, amazing. I was watching yesterday a few videos. Oh man. Yep. Yeah, it was very bad.
Yeah, it's a real shame.
Yeah, yeah. The
It was a
problem is
couple of
that,
years without
oh
any
yeah,
crazy.
oh yeah. And also a lot of people didn't leave. A lot of people stayed there. And wow, it's hard to believe. Why you have that such a monster coming over you and you stay there. I mean, go away, leave, then you come back.
Yeah, that sounds like a good plan.
Yeah, they're talking about hundreds of people dead. So we'll see. Morning, Michael.
Hey, good morning. How
Good
Morning.
did you manage?
morning, master.
Hey, good morning, Gerardo, mi hermano. How was the storm for you guys in Fort Lauderdale,
No,
Leo?
we were lucky. We were lucky. We didn't have almost anything, 30 miles.
Right away. Hold on. It just doesn't make sense for me to do this. I just like the music, so I'm just gonna gonna hack through this one more time. Gerardo and I need to figure out a way. This makes a lot of sense when you do this. When you do this with an introduction and there's no talking before, this makes sense, but I think it's fun, so I'm going to do it.
There you go.
It just gets my energy going. All right, now you need a DJ voice. Yes, ladies and gentlemen, it's time for Snipers Live. All right, that's it. Sorry, I need somebody to do that for me. Earth, Wind, and Fire, one of my favorites. Stock, crypto, and options trading has large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Okay, let's take a look at the markets. Sky is still falling. We're up a little bit today, but man, talk about downward pressure in the markets. I'm going to put this slide up for those of you that don't know these symbols. This will be tagged in the recording. So these are the future symbols we're going to take a look at now. As you probably know, Tom's Tools doesn't go live with today's data until 10 a.m. Eastern, which is 1 hour from now. So if we want to get a feel of what's going on right now in the markets, the S&P, the Dow, the NASDAQ, the Russell, oil, gold, silver, bonds, US dollar. I don't have that future symbol loaded in Thinkorswim, and then Bitcoin. So we're going to look at these future symbols. We also have the corresponding ETFs that we can look at in Tom's Tools. So let's go in there right now. Oh, you know what I'm going to do first, though? I just thought of this. I haven't done this with y'all in a while. So let's just do a quick poll. And I want to just get an idea from you on a couple things. I'm always trying to figure out what's over there where you are, what you need, what you want, what your obstacles are, what your successes are. Of course, is always interesting, but really the purpose of Snipers is to get you momentum, get you into the markets, get you thinking like a trader. So if you'd like to participate in this anonymous poll, please grab the QR code right there with your phones, take a picture of it with your camera on your phones. That'll take you to a website, and then you'll want to enter this code right here, 2589541, or you can type in slido.com in a browser window and join. So let me ask you this. Let me ask you this question. Which of the following option strategies do you actively trade? You're actually in there, and I'll say even paper trading is fine too, but are you paper trading or trading any of these strategies? Please select all that apply. What are you trading right now? Long-term credits. I know some of you are doing butterflies, other advanced strategies. I didn't put straddles and strangles in there. We'll call those calls puts. If you're doing straddles, strangles, OCPs, that would be calls and puts. Okay. Wow. That's great. I wasn't, it makes sense. Everybody that's in the hedge fund course is in the sniper course. So yeah. You know, what's interesting is when I look at this is my sort of distribution of my own personal trading. I do mostly butterflies, various forms that you all, a lot of you know about. I like calendar spreads, iron condors I like as well, which are derivations of butterflies. I do long-term credits occasionally. And then I'll do the occasional call, put, or straddle if I'm compelled. Straddles in this environment are, you know, they're going to be good. They're going to be really good. If you're in the earnings course, earnings live, this afternoon, we're going to talk about the Lockheed Martin straddle. Lockheed Martin is a big defense contractor, and that sucker moves. So we're going to get into that one today at 3 p.m. Eastern Standard Time. What time zone am I in right now? All right, good. So we did some short-term. We did a short-term credit spread last week, and I'm going to talk about that one in a minute. I guess I know one person did the short-term credit spread last week, Dr. John. We'll talk about that, our portfolio here in just a minute. Let's go to the next question. Thanks for answering that, everybody. Let's go to the next one. What's your favorite strategy? You can type anything you want. What's your favorite option strategy? And strategy could, you know, could be hedge fund strategy, or, you know, how are you making your money? Or where do you think the lowest hanging fruit is for you based on your style as a trader? Where do you want to live? Straddles. Yeah, straddles is a sleep at night strategy, the way we do them with optimal red wave, broken wings, hedge fund, credit spreads. Pretty much everything on the board here. I'm going to let you answer a bit longer. This is really useful for me because it helps me understand you first off, but it helps me tune the kind of stuff I talk about on these calls. And as you probably know, Snipers is free to everybody. I've invited a couple of friends this weekend, and anybody I meet that wants to know about options, I give them the website link and they come on in, and anybody can come to these. And for that reason, I do what I can to keep them as basic as possible. But I tell you, I'm hard pressed not to do credit spreads in this market because it is almost like shooting fish in a barrel sometimes, with risk. Of course, there's always a risk. So broken wing butterflies and straddles are the top two favorite strategies of all y'all. All right, let's go to the next question. Is there anything in particular you want to learn today? Any point of emphasis that you'd like for me to focus on today? Is there anything that's a burning question, strategy you want to take a look at? And while you're answering that, I was looking this morning. I get up around 5:30 to prepare for this every morning. I wasn't totally blown away by opportunities today, but there is a really good looking sideways pattern on Zoom. And so given that all of you, a lot of you like credit spreads, almost all of you like credit spreads, I thought maybe we could do 2 credit spreads on Zoom. And wow, this is like a synchronicity, because part of that process is to read support and resistance. You know, support and resistance. I've been doing this for 25 years, man. You know, I know Elliott wave, Fibonacci, parabolic SAR, MACD, stochastics, blah, blah, blah. Not meant to diminish, but to me, it's much simpler than all of that. The most powerful thing that we can put on a chart is support and resistance. And so given this is really cool, this is lining me up to do an iron condor on Zoom, which is 2 credit spreads at support and resistance. So that's great. So I'm on the right track. That's where I was going to lean. And based on what all of you want to learn today, we're going to go right there. Here's my last question for you. Where does the market go from here? Up, down, sideways, volatile? Who the hell knows? I don't know. Where's it going? What's your prediction? What's your guess? You know what we're doing at the end of the day is we're guessing. Where is the market going to go from here? Where's the stock going to go from here? we're guessing, predicting. Now, guessing is a loose word, but we can predict with an edge, like a probability edge. Maybe greater than 50%. Statistically, we can find trades that have a 90% probability of profit. And so down is where I think it's going as well. Who knows? I would say instead of who knows, what I would say is volatile. So I would say volatile and down. Down, overall trend down, but intermixed with extraordinary volatility. That's what I think is going to happen. That's my guess. I could be wrong. I have been many times in my own life, and probably quite recently. So let's go through this, the markets. Oh, before we do that, all right, I went into Bloomberg. This is another place where I check news. And I don't know if Claudia, if you're on the call, if you'd like to say a bit about what you see on the Brazilian election front. There's opportunity there for us. In the hedge fund course, we have a double broken wing butterfly on Brazil. I'll show you the ETF here in a minute. You can actually trade Brazil, but Brazil's got some elections going on. And this is not the prime news I want to talk about, but since I'm already talking about Brazil, hey, Gerardo, is Claudia on the call? She's probably at work. She needs to.
I think Ricardo is on, and he would be very motivated to learn about Brazil. He's from
Okay.
Yeah, Ricardo is here. Claudia, I don't see her.
Okay. Hey, Ricardo, welcome to Snipers. Yeah, it's good to have you. Where do you live, Ricardo? You have to unmute if you can. All right, I'll just keep going. So there's a runoff. Go ahead.
Okay, I'm here.
Excellent.
I'm a Brazilian living in Uruguay.
Okay, awesome. Well, maybe I don't know if you have a point of view about the election, but apparently there's I don't have a lot of knowledge about Brazil, but I know that there's two potential presidents, and there's a runoff. They had an election today, I think it was today or yesterday, and now there's a runoff election scheduled for the end of the month.
Correct.
And so I guess if one person gets elected, the market supposedly tanks, and vice versa. Is that correct?
Actually, it's not exactly like that, because yesterday, are you all hearing me well?
Yeah. Hey, Gerardo, can you mute yourself, brother? Thank you, bro.
Yeah,
we can hear you fine. Yeah.
Okay, so yesterday we had the first turn, and there was important outcomes from yesterday that make the outlook for the final election very different per se. What I mean is, the incumbent Bolsonaro made like the majority of the Senate chairs yesterday, the majority of the chamber chairs yesterday also, although he lost by 5%, which the polls were like he was like with a 10% difference behind, and it was all, it's very infiltrated by the leftists, and they manipulate the data. So the real outcome that came up is just 5%, which is a boost to his final probabilities of winning. So what I mean is, now, even if the opponent Lula wins, he won't be able to move without negotiating with both chambers, because the incumbent got majority yesterday. You know what I mean?
Yeah, I get you. Yeah. So it creates a bit more stability.
A bit more stability. So I don't think we'll see market tanking in any outcome. But just that's it for now. But it's going to be a tight fight, a hard fight, and anyways, it would be better for the country if the incumbent keeps in the job, because he's been doing a great job, especially if we count that we had all this pandemic and etc. We pushed the fiscal situation, but anyways, He fixed
Mhm.
all the state companies. They were extremely profitable. The amount of dividends that he distributed last year helped him to balance the fiscal situation. I mean, and the other one is a mess.
Yeah.
He comes to take everything like a pigeon in a chessboard. Like it's a mess. But all the the international media is very, very leftist, including, I mean, I was reading the New York Times yesterday morning commenting about the election, the situation, totally distorted. So it's terrible. And they are, during the last decades, they infiltrated in the universities, in the media and everything. So it's a mess. But so I personally hope, of course, I'm more conservative, and I hope the incumbent keeps the chair. But anyways, the volatility should diminish given yesterday results. That's it.
Yeah. Well, that's good news. That's really good news. I know we had Claudia, who's also from Brazil, and she was speaking about it. And she was concerned that it would go the other way. So that's really good news. And so what we did and when you look at this chart here, here's an ETF, everybody, that tracks Brazil, EWZ. And what's really interesting, when you get a situation, now you can see here, this is the Brazilian stock market. All right, so you can see some volatility, some movement, but not a lot of movement. But look at this implied volatility. This is the options becoming more expensive because of expected movement. And when we see situations like that, what we did last week, and Paul actually presented a trade for us, which was a double butterfly, broken wing butterfly. I'm not going to cover that here. This isn't a super advanced top of the mountain kind of strategy, but a bullish broken wing butterfly up here and one down here, such that if no matter what happens, if this market runs up, then we make money. If it runs down, we make money. As this thing settles and news comes out, IV drops, we make money on that. And so those are the kinds of things we can do with advanced option strategies. And that's not what this class is, but that's the kind of stuff we look at. We look at expected move of the stock. We look at support resistance. We look at implied volatility. This is a gift, everybody. When you see something like that, when you see implied volatility spike up, not because the stock's moving, by the way, that's the point. Not because the stock is doing this. I mean, look here, this index crashed here and the IV only went up to here. This is there solely because of the expected move in the instrument. It'll be interesting to see what the IV does today after the initial election, and with the runoff coming at the end of the month, October 30th. We'll see what happens to IV. So it's really interesting to me when you see stuff like that. I like this IV with broken wing butterflies. Credit spreads indeed also profit from these spikes in implied volatility. So that's the EWZ. I don't see any opportunity here because I don't know where this thing is going to go. It could go either way. So a credit spread for me would be sell one way up here, sell one way down there. Now maybe this would be a good bear call spread. Now that I think about it, imagine that the election turns out to be really good for the Brazilian market. But the Brazilian market is already depressed because of the world climate, inflation, rising interest rates, US dollar getting strong, all that stuff is keeping this suppressed anyway. So as I think through it, I would be interested in perhaps selling a bearish credit spread on the EWZ. So we'll look at that in a few minutes. All right, so let's go through the markets real quick here. Oh, let me finish what I was doing and keep myself on track. Credit Suisse market turmoil deepens after CEO memo backfires. Credit Suisse is down today. U.S. stocks fall. U.S. futures wobble on economic jitters. Markets wrap. Tesla slumps as deliveries disappoint. They still had a really large number of deliveries, but they didn't meet forecasts. So Tesla could be an opportunity for us. And let's see. And then, of course, we need to be concerned about Kim Kardashian, who has to pay $1.3 million Wow, how did she make the? How did she make? Why is she in the news? I don't get it. I don't get it. I'm not going to get on my soapbox. What is she doing out there? I don't know. Anyway, so the futures are down 1.51%. Let's go into the futures and take a look and see what's up. Let's take a look. Here's all the future symbols that I gave you on that chart. And so what was really telling last Friday, let me zoom in here. We talk about support and resistance, right? Here, this was an all-time, well, not an all-time, the most recent low in the markets. And then what was telling on Friday is that we set a new low. We closed there, in fact. We closed towards the end of the day, towards the bottom of the daily range. The volume was elevated, and now we're getting a little bit of a bounce today. So, we had a bounce there too, and we had a bounce there too, and we had a bounce there too. So you're not going to see, chicken little market, the sky's falling, the markets are dropping. That's the overall trend. It's going to be intermixed with little pops in the market. So we're getting one today. Sometimes this is referred to as a dead cat bounce. When cats fall from a height, a big height, they hit the ground, they bounce, and then they die. So that's a dead cat bounce. Looks like that might happen. Keep an eye on it as we go forward. Let's talk about what might cause some bounces this week. I like to take a look at the U.S. economic calendar, Market Watch, economy-politics/calendar. It's not that big of a week. We've got mostly jobs reports stuff coming out at the end of the week, jobless claims, non-farm payrolls. So this is really going to be a jobs week, keeping an eye on the jobs numbers. The employment reports that came out today, pretty flat, didn't really move the markets. So it's going to be a fairly light week. We're not going to see any CPI or PPI or the core inflationary reports aren't coming out this week. So I don't see anything big that could move the market other than jobs coming out on Thursday and Friday. So that's something to know. And what could happen is a favorable job reports could lead us to a bounce. The big ones we got to worry about, though, are the PPI and the CPI, producer price index, consumer price index. Those are inflationary reports that could create something like this. If they reveal that inflation is getting better, then we could see very well a pop. So that's why, although the overall trend is down, I would be, as much as I want to buy a put and profit here, I'd rather do a spread of some sort. Credit spreads up top. Sell where you don't think the market's going to make it back to, or the stock will make it back to. Okay, so that's the S&P 500. Let's take a look at the NASDAQ. We're going to see bounces everywhere. NASDAQ has bounced off 1100. Let's take a look at the Dow Jones /YM. Same pattern. I don't need to go through the rest of them. They're all doing the same thing. Now, I do want to look at the Russell, though, the RTY. I don't have it in my list. Let me put it up here. RTY. The Russell. Now, this is sometimes, so the Russell 2000 is the smallest 2000 market cap stocks in the US market, and they oftentimes will not be as correlated. So the Russell has bounced off of 1650 support. It hasn't breached this low back here in June. So the small cap stocks are having some level of resilience. And oftentimes the small caps will lead the market. So if money starts flowing into small caps or bargains, we could see the markets follow suit. So we're going to keep an eye on that one going forward. Let's take a look at the US dollar. I'm going to go into Tom's tools. Well, I can do it here to stay consistent. So the EUP is the US dollar. And this is really still the case. We talked about this last week. So the US dollar is getting stronger. Why? Well, the Fed is raising interest rates at a 75 basis point clip. We're having another meeting in the first Tuesday and Wednesday of November. In a month, interest rates will be lifted once again. And what's been happening in this interest rate environment? The dollar gets stronger. The US dollar gets stronger with rising interest rates. So imagine And I read a stat today, 44% of international transactions are conducted with US dollars. And so when the US dollar gets expensive for foreign dollars, that exacerbates inflation, right? It exacerbates the fear of recession. Our stuff is more expensive. US stuff is more expensive. So this is really key. And the other thing that's making the US dollar rise even more against foreign currencies is that the US Fed Reserve is raising interest rates at a bigger clip, higher than countries around the world, which is exacerbating the distance, the strength of the US dollar. So all of that is creating a lot of pressure. And it's also driving things like gold down. So if we take a look at gold /GC, gold has just bounced. Now I was looking today at this chart here in Tom's tools. Oh, here it is right here. So this is an overlay chart of gold and the UUP. So the UUP is black. And what you'll always see is, not always, what you normally see is an inverse relationship to the strength of the US dollar, the UUP ETF. That's the black and white candles. And then the red and green candles are gold. And right here, the US dollar took a little bit of a breather. It lost a bit of strength for 3 days in a row, and gold rose 3 days in a row. But what was interesting to me on Friday was that gold had a little bit of a spike. So what we're looking for is the US dollar to stay flat, as it did pretty much from the last 2 days anyway, or rise along with gold rising. We got a taste of it on Friday, and we want to keep an eye there. If gold starts rising and the US dollar doesn't move with it, or does move with it up, if the inverse relationship is broken, gold's rising, then that's a sign of risk off. So maybe we've got risk off coming. And now, if there's ever a time to look for it, it's now. It is now. So we want to keep an eye on gold. We will going forward. All right. So that's the US dollar. Gold. Let's take a look at USO. USO similar. This is the ETF that tracks oil. And there's an inverse relationship as well with oil. As the US dollar gets more stronger, it drives down commodity prices, including oil. So oil is kind of hanging out here. Let's take a look at the futures for oil /CL. Little death cross there, definite downtrend in oil, little pop today. I would expect this downtrend to continue unless the US dollar gets weaker. Of course, international demand has everything to do with it as well. It's a very complex instrument. It's a commodity that's most valuable on the planet, I would say. And you can see here that we got a little pop on the futures today. All right, so that's bonds. Let's look at bonds and then the VIX. Bonds. My microphone's in the way, I can't see it. So bonds are starting to rise. Bonds also drop in a rising interest rate environment. And bonds have come up on balance over the last 4 days. Bonds are up, including today. So bonds will eventually, even though the interest rate environment is still hot, it's being lifted month to month. Bonds are being put downward pressure applies on bonds. They drop in a rising interest rate environment, but they're up today. So that's another place to look for risk off. We're at that point. We're right at market setting new lows. It's a lot of international global economy that's we could very well go into a global recession, and all of that is creating a lot of downward pressure. So what do I see then going forward? I would say market volatility with an overall downtrend. So we've got to be careful when we buy calls and puts. Straddles make a lot of sense right now. We'll talk about those, as I said, at 3 p.m. Eastern today on the earnings live call. We'll be doing a lot of straddles, particularly on Lockheed Martin. All right, anybody got comments or questions about any of what I've just covered so far? Okay, good. Let me check the chat box here. Hey, Gerardo, I know you're doing this, but if you see any anything that you see in the chats that you want to throw in, please feel free to do that, brother.
Yes,
OPEC
sir.
is, yeah, thank you, man. Jay David. Jay David just said OPEC is talking about reducing production to drive oil up. That's the thing you got to worry about with oil, everybody, is that OPEC has the spigot. You know, they'll tighten the spigot, produce less if the price of oil is dropping. They want to keep their profits, right? The OPEC nations. So that's always in the wings, and it makes kind of predicting a long-term future of oil a little bit tenuous because of the politics around the price of oil. So Jay David, thank you for that point. That's really, really important.
Mike?
Yeah, bud. Good morning, Andrew.
Hi, I got in late. I was just looking at the sector spider and the information from, I'm assuming this must be Friday. It's real estate's gone positive.
It has. I saw that. Yeah. On Friday, anyway, real estate popped up. That was the only bullish sector on Friday. So the thing about real estate is in a rising interest rate environment, mortgage rates go up, making it decreases demand for houses. Home builders are getting smacked around. We have a double butterfly on DH Horton, you know, but for some reason, real estate popped on Friday. Let's take a quick look at the XLRE. Yeah, it did pop. Why? Why did that happen? I don't see any news whatsoever to account for that spike there. If anybody has any ideas or knows, please let us know. But we got a little pop yesterday. Today, real estate, as the markets are open now, real estate has popped. The XLRE is an ETF that tracks real estate, has popped up. So that's interesting, Andrew. I don't know why though. Do you have an idea? Do you have any insights?
Ian. Hurricane Ian.
Oh, Ian, yeah, that probably has something to do with it. Yeah, that would be it. That would be it. All right. So while we're in Sector Spider, let's just take a look here. This is a really cool free service. When you pop in here, I really love this site, and I use it all the time. There's a lot of information about all the sector spiders, the Standard & Poor's ETFs, and they track the various sectors. And there's a lot of information about all of them. You know, you've got real estate, energy, utilities, tech, home build, basic materials. All of these different sectors cover pretty much the industry in the U.S. across the world, really, but our U.S. companies. And if you go to Sector Tracker, oh, what's up with this free website? It's not working. How dare they? All right, tools, Sector Tracker. There we go. We got it. Sector Tracker. What's your vector, Victor? Is gives you a. Hold on a second. Let me try that again. Tools, Sector Tracker. And then from here, you can get different views, like 5 days, 1 month, 3 months. Over the last month, as you might expect, because the S&P has dropped 10% over the last month, it makes perfect sense that virtually all the sectors have dropped at least around 10%. And of all of them, the two sectors that have dropped the most are real estate and tech. Over the last month, real estate and technology have dropped more than the overall market. Over the last month, decidedly, the most two bearish sectors have been real estate and technology over the last 5 days. So this is valuable information, you know? So over the last 5 days, the S&P has dropped 2.91%. And look, surprisingly to me, and I did some research this morning. I haven't figured out exactly why. Maybe the hurricane had something to do with it, but utilities have dropped 8%, 8.71% over the last 5 days. And again, tech and real estate are in the low range as well. All of these bottom three sectors have outpaced the bearishness in the overall market. So has consumer staples, you know, stuff like food and things that we need. those have dropped as well. Over the last day, Friday's action, real estate took a pop, and we're assuming it's because of the hurricane. That makes sense. That's the only reason I can think of that real estate would have a bit of a pop. So what do we do with that information? Well, vampires, we look for opportunities. We look for the weak. We look for the weakest sectors in a weak market, and then maybe go into the weakest stocks in that sector. Let's go to XLK. We did the XLK. We did a Qualcomm trade. We'll look at here in a few minutes. A 1 week trade, a 4-day trade on Qualcomm. And the reason that tech, there's a lot of reasons why tech is down, but one that made it worse was the stance that the U.S. is taking with Chinese exports and imports. So there's a dampening of commerce between U.S. and China. So companies that do business in China, like a lot of tech companies do, they're being limited. Their income, their revenues are being contracted because of international trade policy between the U.S. and China. So that's what we went after tech last week on Qualcomm, and we had a nice little, I forgot, I'll show you the trade in a minute. We had a nice little profit on Qualcomm. So there's another place to keep looking. And if you want to take a look at the components for those stocks, you can click on, in this case, XLK, and then you see, sort by percent change, you can see the companies that have dropped most. Apple is in there, everybody. Advanced Micro Devices, there's Qualcomm. We hit that one last week. Maybe we go get some more. Maybe we go get some more tech stocks today. Real estate over the last 5 days, percent change. Ventus, Prologis, American Tower and Crown Castle are amongst the weakest real estate stocks. Weak market, weakest sector, weakest stocks in those sectors. You can see it very visually here. Go to sector heat map, and then you just go find the brightest red box. And so let's go to tech, and look here, Apple, one of the most bearish of the stocks that comprise the XLK. Yeah, and here's Skyworks. So those are, from a color perspective, very easy to find. Let's look at real estate as well. Let's go to, let me back up here. That was over 1 day there. Let's do real estate, XLRE. So I want to look for the sector heat map. Let's go for the brightest red box. That's the weakest of the week. 5-day view. Where's real estate? There it is. Of the real estate stocks, I don't see any bright red, but the brighter the red, the better. Look, all of these AMT, PLDs, Crown Castle, all of these are the most bearish of the lot. The larger the box, the bigger the market cap. All right, so that's a place for us to look today. Now, with 23 minutes left, I do want to get into some trades. So what I'm leaning towards doing now is, instead of going through the portfolio, by the way, let me show you the open portfolio, and it now includes closed trades. I'll come back to this in a few minutes because I do want to spend some time looking for live trades right now. This is where we're at. We're batting 1,000. We've won across the board. We hit our Qualcomm trade. We made $120 on that one. We're making money everywhere so far anyway. We got long-term bear calls mostly. And then we have 2 sniper bear call credits, which are shorter term. So those are all, that's the one. Oxy is one I was mentioning. Oxy was the one we put on for last week. So we'll come back to all of that. So what do we do next? I would say, well, somebody asked me about support resistance. Let's talk about that real quick here. Let me put up a chart of the SPYs. Okay. So what's support resistance? Well, the strongest support resistance occurs at round numbers. So we have the SPYs chart. This is the ETF that tracks the S&P 500. All right. Now notice that on the vertical axis on the left, we have 10-point increments. And notice how often that there's turning points. There's one at round numbers. That's resistance. The stock hits resistance and then drops down to the next level, which is 450. Support. Let me zoom in a little bit so you can see this a little bit better. Let's do 60 days. Supporting resistance with credit spreads is the most important thing on a chart. It really is. And the reason that it exists at round numbers is because human beings are thinking and trading with round numbers, and the human beings we're mostly concerned about are institutions. You know, the big boys and girls. They control 80% of the market, give or take. And so they're using program trading to buy and sell, and they'll say stuff like, they'll program their computers to say, you know, keep buying the S&P 500 until we hit 430, and then stop, and then sell until we hit 390. Bounce, 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 bounce. Support, resistance, resistance, support, support, support. Fibonacci's good. Moving averages are good. They're all support resistance, but without question, the most powerful support resistance level is a round number. Look at 370. Resistance, support, almost support there. Resistance, 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 resistance. And then we come down and we bounce off, we bounce off 360. Support. Yesterday or Friday, we broke below support. Where's the next stopping point? Well, the next round number, 350. And so that's the thing. That's the, you know, as I said in the beginning, I've done them all. I've done all these, virtually every technical indicator and system I've played with. But what trumps them all is support and resistance. So as credit spread traders, you know, let's just take this for an example. If I wanted to make money on the SPYs with a prognosis that the SPYs overall should continue this very decided downtrend, but we may get a bounce like this, then what I'm looking at is, well, where's a line in the sand where I could sell an option, sell a credit spread, and make money? So yeah, if I could sell a credit spread up here at 430, what that would translate to English is I'll make money anywhere below 430. The stock drops, we make money. The stock goes sideways, we make money. The stock rises a little bit, we make money. The stock rises a lot, and we make money. That's it. That's the idea of a credit spread. So what I'm looking at here is, well, maybe we could just, you know, put a credit spread on the SPYs. The question then is, how close to the heat do you want to get? And for me on this one, I would say I'd be willing to take on a credit spread at 400. All right, so why 400? Well, it's around 100, which tends to offer a higher degree of resistance or support. It was support there, resistance there, resistance there, support there, resistance there, resistance there. Became support here on the gap down, right to 390 and bounce, bounce, bounce. I like that level, 400. It also coincides with this 50-day average, which is also, in this case, a resistance level. So if I sell here, what I do next is I count the number of resistance levels between where the stock is and where my line in the sand is going to be. I'll build this trade here in a minute. We'll just place it. What the heck? Let's do it. High probability trade. So look, if we place this trade, the way we get into trouble, what has to happen is the stock needs to break back up above 360, one resistance level. My dog just knocked over my light. It's okay, buddy. 360, 370 resistance, that's 2. And then we've got 380, that's 3 levels, resistance levels. 390, 4, 400, 5, and then the 50-day average 6. So you got 6 levels of resistance between the stock and where you start getting into some trouble. So that's the idea of support and resistance with these credit spreads, short-term ones. We're going to do a short-term one here. Short-term credit spreads at support and resistance. Now we're bearish. We think there might be a pop-up. So we're going to be selling right at 400. Our line in the sand is we're going to make money anywhere below 400. Stock tanks, we make money. Stock goes sideways, we make money. Stock rises quite a bit, and we still make money. So that's the idea of a credit spread. And that's where snipers got its name. It's like from a safe distance, snipe profits. Our safe distance is 400, some 40 points away from where the stock currently is. So it's high probability profits. So how do we build this thing? Well, I can build it from scratch, or I could go into, I'm going to keep that tab there, or I could go into a searcher. We got a cool searcher, single strategy, called credit spread. And right in here, I'm going to type in the SPYs. And then I want a short-term credit spread. I want to snipe some short-term profits. And then I hit search, and let's see what it gives me. Now, none of these are at 400. I'm going to change them. But right out of the chute, you could put on a trade on the SPYs that offers a 73.38% statistical probability of profit, offering you a whopping 66.67% return on investment by when? By October 7th, which is Friday. So that is available. But let's take a look at it. I'm going to pull up the risk graph. What's wrong with this one? Well, we could get we could be into the loss zone pretty fast. Here's my profit, potential profit in the trade. There's my break even, profit to the right, risk to the left. Here's a picture that tells me the what's so. If the stock rises even a little bit, I'm going to get into trouble. All right, I've only got one resistance level offering me any kind of protection. So that's too close to the heat. You could do it. I mean, you have a 73% chance of profit by putting this trade on. But to me, it's too close to the heat. My job, the game that I play, and most of you are playing with me, is risk mitigation. It's too close. It's too close to the heat. So what I'll do instead is I'll keep this trade and I'm going to lift it up. I'm going to pull it further away from the heat, and I'm going to see what we can get. I don't know if we're going to get much for a 7-day trade, but let's just do a really tight credit spread, lifting it up, and there's no premium there for 7 days. So what do I do now? Well, let's just sell some more time. I'm going to edit this trade, and instead of selling for October 7, let's go 5 days. Let's go October 12. That'll give us 14 days. And let's see what kind of premium is available there. We may have to go longer term on this. And there's just not a lot of credit there at the moment. Okay, so I'll have to go longer term. So let me edit the trade one more time. And let's go out to, let's see, 14, 19, October 19. Let's go to the end of October, right around Halloween. Oh, heck, let's go for Halloween. Why not? October 31st. Here's a Halloween trade. That'll pay for your Halloween candy if you're in the US. Let's see what this will give us. There's no 401 calls. Okay, so I'm going to edit the trade and see what upward calls I have for Halloween. October 31st. These are all the strikes that are available, and I can do the 402. Yeah, I'll do that. So let's see what we can get. Maybe not much. I don't know. We got to see. I'm just shopping, man. What's out there? Yeah, so there's not a lot of premium there. Even if I went out 31 days, I'm only getting 4% return on investment on the SPYs. So there's just not anything there right now. I'll keep looking. We could also try other ETFs. I could go after the entire ETF community and look for short-term credits. One of the things this scanner does is it looks for stocks that have dropped recently. So let's just see what's available in the ETFs, REITs, and trusts. Okay. 82% to make 26. Sorry, I still got my cold. It's not quite gone yet. So this is a bearish credit spread on the SOXL, selling the 950 call. That's our line in the sand. We want the stock to be below 950. If I pull up the pick, 950. That's really close. This is the semiconductors. And, we have every reason to suspect that the semis will drop from here based on what's going on with trade policy and inflation and the strength of the US dollar. But I don't want to sell that close. And so what I do on this one again is lift it up. This is the China index. I mean, there's some stuff in here that we could play with. Here's semis, SMH, 7-day trade offering 53%. Let's take a look at the semis selling at 189. Hit pick 3. 189 is too close. I would consider perhaps selling at 200, which is, again, look at support resistance here, everybody. Resistance, support, resistance, resistance, support, support, resistance, support here. We're now below. So selling up here would be reasonable. Around 200 is as close as I would get on this one. Plenty of potential profit. So let's lift this one up to, let's say 200. All right, let me grab it. I want to get further away from the heat, up to 200. Edit the trade. Let's sell 200. Let me check the strikes available for October 7. And this is a 1 week trade, so we may have to go out further in time. 202.50. Risk graph. All right, this one's offering 6% for 7 days. That's a rule of thumb. If you can make a percentage point a day, almost 7% over 7 days. That's a rule of thumb. Probability of profit 99.2% to make 7% by Friday. So let me post that in as a case study. I want more. I like there to be more return than that in a week. So I'm not going to take this one, but I'll post it in the boards so that anybody that wants to paper trade this, you can paper trade it. But that's an example of the process that I would follow in this market. Let me go to our website. If you're in Snipers, then you have access to the community board. And what I do on these calls is I will post the trades in the forum. Excuse me. I went to the wrong one. All right, so under Snipers, I'm going to post this trade. And I'm going to make it very clear that this is a paper trade. And the optional tag is Sniper Trade Ideas. And I'm going to go ahead and just copy the image here. And this is the SMH. And I'm also, so I'll leave that there for all of you to play with if you're compelled. I don't think there's enough, there's not enough profit there for me. So I would continue that process until I found something that I really like. Now, here's the other thing you can do. If you want safety and you just want to go after the most highly probable trades, statistically speaking, long-term. So back to our prognosis, the market is definitely bearish. Let's look at what's going on right now. A little bit of a inside bounce. There's no enthusiasm. It's just a little pause in this bearishness. We could get some pops up, but over the long term, I wouldn't expect us to be reaching some of these highs that we've just had. So I think overall down, long-term credits will survive any kind of pop-up in the markets. And so that's where I'm going to play now. This is probability trading, taking advantage of high implied volatility. I'm going to go after everything that has options. And we're just going to look at this list and look for the highest probability trades. And then from here, I'll do a little bit of analysis and see what we got here. Domino's Pizza, 88% chance to make almost 20%. Earnings is in 13 days. This is selling the 360 call and buying the 370. The expiration is December 16th. This is a long-term trade. It's it's December, which is what, October, November, December. It's almost it's about 3 months away. If I look at a pick here, I'm looking for 360. That's where I need the stock to stay beneath. My line in the sand is 360. And then I find it on my chart here. There's 360. That's too close for me. That's too close for me. That Domino's could very well gap up in over between now and December. So I don't want to be there on this one. Lockheed Martin earnings coming up very soon. All of these have earnings in the fairly near future. Cisco could be interesting though. Cisco, one of the tech stocks, 45 is the underlying, line in the sand. Let's go over here to 45. Yeah, that's a little close as well. Okay, now I do want to get one trade off, so I'm going to do this right now. I'll maybe come back and do this. I just wanted to give you an idea of how to use the software to find these trades and the things I think about out loud. But the trade that I like right now is this one. Anybody ever heard of Zoom? Yeah, we're on a Zoom call right now, Mike. Yes, we are. And if I look at this stock, Zoom took a really meteoric bullish run during COVID. And look at support and resistance here, everybody. All right, 80. Oh, there's 100 support, resistance. Then we had 80. Look, the stock bounced off 80. Bounce, support. Support was breached. Support becomes resistance at 80. 80. So 80 is now resistance. The next level of support is 70. So the idea here would be we could sell a credit spread up here to make money below 80, and we could sell a credit spread underneath at 70 to make money above 70. Two credit spreads, a bearish credit spread up here, a bullish credit spread down there. Let's take a look at the implied volatility. Probably going too complicated here for some of you. The IV is pretty low. Earnings is a long time away. So my short-term prognosis is sideways, that Zoom will remain below 80 and above 70. So what do we do with that? Well, we're going to sell a credit spread at 80 and a credit spread at 70. Now, I could build that manually, or I could use one of Tom's scanners, searchers, single strategy, condor. Two credit spreads is a condor. At the money iron condors. Type in Zoom as the stock, and the scanner will go find us some credit spreads. Double credit spreads, condors, iron condors. All of these are 7-day trades right here. So here's an opportunity for us to generate some pretty nice return on investment with high probability over the next 7 days. On a stock, break out the paddles. Zoom is going nowhere. Certainly, it's reasonable to expect Zoom to stay between 70 and 80 between now and Friday. You think there's a good chance of that? Yeah, I do. I really do. So this is going to be a short-term iron condor, and we're going to go longer than 8. So I'm not going to stop in 3 minutes. We'll get this filled, but let's take a look at what we can actually do here. First off, I'm going to go into Thinkorswim and check the news. Always do this before you take a trade. Check news. Any serious news happening? Just taking a quick look here. No real big news. At least recently, anyway. Now Zoom is at 72 today. So I'm looking at the live chart. Zoom's making a move to 70. All right, so I'm less interested in 70 now. I like 80, and I like maybe 65. So I want to sell at 80, and 70 is too close. The stock's at 72, so I want to move my credit spread further away from the heat and drop it to 65. So let's see what that looks like. I'm going to grab the first trade. Now these strikes aren't what I want, so then I'll take the trade, edit it, and see if there's any premium that far away. So the upper strike is 80. The lower put strike is 65. Give ourselves a bit more room. And so these are the credits. I'll mark them as these are the short strikes. Those are our lines in the sand. And then I need to buy above. So October 7, I got 80 and 65. October 7, just checking the strikes that are available. 80, 50, 81. And then on under 65, I've got 64. Let's keep this tight to make it simple for now. 64 there, 81 there. So these are the protections. So this long call up top protects us in case the stock gaps up. And then this 64 put here protects us in case the stock drops. All right. So if you understand that, cool. If not, look at the picture, risk graph. This gives us a chance to make 15% over the next 7 days. This expires on Friday with a probability of profit of 99.7%. Are you serious? Surely you can't be serious. I am serious, and don't call me Shirley. All right, let's do it. Let's go after it. Now this data is from Friday. So the actual prices will be different. Let's see what they are. I'm going to hop into a live simulated account on Zoom. I'm not recommending Thinkorswim. It's a nice simulated platform. And then what I'll do here is go to October 7, and I'm going to select vertical. And then what do I want to sell? Well, I want to sell this 65.64 credit spread underneath. I click the bid price. That will create the lower credit spread. And then I want to do the 80 above. Control, click the bid for the 80. I'm going to change that strike for the 80, 80, 50. And I'll make this strike down here, 81. And this is going to give us a 7-cent credit, which is less than we had on Friday. Let's see. So the credit has dropped quite a bit, given that Zoom has dropped a little bit today. So we could get more, the way we get more credit is to get the strikes closer. I'm not going to do that here. I'm going to go after, it says 11 cents. It was 13 cents on Friday. So we're pretty close. I'll put it in for 12 cents. And let's review the order. Let's position size it first. Now, before you do any trade, but especially short-term credit spreads, you got to make sure that you control your risk. So $86.50. Let me repaint this. Now our fill price is going to be about 11 cents, looks like. So what I'm going to do is increase the price of one of the options by 3 cents, and that will give me an 11-cent credit up here. And so that gives me an idea of my max risk. There's 12% now between now and Friday. I'll take that with a 99% probability of profit. Yes, please. That's a nice little 5-day return. And my max risk is now 89. If we did 5 of these, my max risk in this trade would be 500, roughly, just under. So I'm going to do 5 of these. And now all hell breaks loose and Zoom gaps up and down. The worst case scenario is we lose 445. Very critical that you take that step. So let's go back over here and make sure that we got the right trade. First off, I'll take the contracts down to 5, and then I'm going to verify. I want to sell 5 of the October 7 80 calls. Yep. I want to buy 5 of the 81 calls, the ones right above. Yep. I want to sell 5 of the 65 puts. Yes, please. And then I'm going to buy 5 beneath at 64. I'm going to go for a 12-cent credit to see if we can get it. It's now mid-price is now 12 cents. So guess what? I'm going to ask for, give me 13. Can I have 13, please? Doesn't hurt to ask. Confirm and send. Re-verify that you have the right trade. If you hit send here and you're filled, it's yours. So make sure that you haven't made a mistake. Verify there. I hit send. And then go back to monitor. And you can see the current mark price, excuse me, is 10.50, and the current credit I'm asking for is 13. So I'm 3 cents away. So it doesn't hurt to ask. All right, I'll take a little bit less. So then I go over here to the end of the working orders. I went to monitor, I'm under working orders. I click that button right there, cancel replace, and let's drop it to 12. The mid price is now 9. I'm going to put it in for 11 cents, and we're going to let it sit. I'm going to let it sit for today. Okay, so that's the trade. Let me post this on the boards so everybody has an access to it. Okay, so while I'm posting this, does anybody have anything they're looking at that you would like for me to review? Any other trading ideas out there? We could go all day, man. Believe me, there's so much going on right now. So this is going to be the Zoom 7-day iron condor. All of you have access to the boards. If you want to get access to the trades that we do here, just come to the boards. They're all here. Sniper trade ideas. And then I'll paste. And let me get the risk graph as well, if I can find where I put it. So many tabs up here. I got to find it now. What did I do with it? SMH zoom. That's it right there. I think. Yeah, there we go. I'm going to zoom in on this risk graph from 50 to 100 so you can all see it better. Risk graph. Yeah, just really a gorgeous trade, everybody. I mean, it's as long as the stock's in this little backyard here between now and Friday, you're going to generate 12% if you get filled on this trade. Let me post the risk graph right there. Latest. So there you go. There's another case study for y'all to play with. Every one of you really should be paper trading these. You know, place them, put them in Tom's tools, get filled in a simulated account. If you're really convicted on putting real money in, just do one contract until you master the strategy. It's really important that you not just jump in without practicing. Back test these iron condors. Okay. So that's what's up. Let's take a quick look at the markets and then I'll review the portfolio.
Hey, Mike,
Yeah, bud.
George was asking about Tesla too.
Yeah, Tesla was on the list of big movers. Yeah. Mm-hmm. Yeah, that's beautiful. That's a perfect sniper candidate. Oops. And why did Tesla drop? The news on Tesla was that they reported record deliveries, but they were still shy of analyst targets. All right. So there were supposed to be more deliveries, but they set a record delivery number, but not as many as they said they would. And so they're getting taken behind the woodshed and spanked. Where's Tesla going next? All right. So their revenues are likely to be contracted a bit on the next earnings announcement, but they're still setting record deliveries. So when I hear that, I'm like, well, I think that that's the spanking that they're going to get. All right, we just got 11 cents on our iron condor. Let me come back to that. And so what I'll do next is save this in Tom's tools. This is our trade, and I'll save it in our snipers folder. So there's another trade on the board. This is an iron condor. Now, some of you are new to iron condors, so the way you handle this trade, which I forgot to mention, was, just if the stock just stays within the backyard here, meaning below 80 and above 65 by Friday, I mean, there's a good chance of that, then you're gonna do well. Just let the whole thing expire. If the stock closes above the upper break even, you shut down that spread. So for example, here, if the stock closes above 80, then you get out. You close down You buy back the 80 call and you sell the 81 call. You close down this upper credit spread and let the opposite expire. On the downside, if the stock closes beneath this low break even, you get rid of the put spread, this bottom one, buy the 65, sell the 64, just get out of the put and let the other spread expire. Really simple to manage these trades, and then just let them go to expiration. It's really easy. Okay, so that's saved. Back to Tesla. What do we do with it? George, what do you say? What do you think? Here's the one thing I think is maybe a short-term credit spread up here and maybe one down here. This would be a decent iron condor candidate. The only thing that gets me a little bit nervous is the volatile market. That's disappointing news. It will have a dampening effect on earnings. The next earnings announcement, which is coming up for approximately October, the end of October, in about 3 weeks, Tesla announces earnings. So I'd want to do something short term that expires before earnings if I'm doing a credit spread, which is what I think there is to do. So I'm thinking maybe if we could sell up here above 280, ideally at 290, a bear call spread at 290, and a short term one, maybe 2 weeks. And then I'd even consider selling a put spread, maybe down at 220 or 200. So those are the two ways to potentially trade this one. George, what ideas do you have? Do you have another?
Well, I
way?
was looking to do it at buying a put at 250, but it's kind of expensive.
Yeah.
If I'd been a little earlier on this when the market opened, I was looking at doing it, but I didn't. So
yeah.
And it's gone down to 244 and already popped up to 247. So I'm a little uncomfortable with the idea of buying the put.
I think I'd be very worried. I'm not worried, but I'd be cognizant of 240, which almost reached today and then bounced. So 240 would be a support level that you'd have to have breached to make money with a put. That's why I like selling credits. If you look at a live chart of Tesla now, so that now the data, we're past 10 o'clock. So the data is now live. And if I put up Tesla, you'll see most likely the IV has spiked. It has. All right. So when you see high IV like that, this is a gift for credit spreads. Credit spreads eat this stuff for lunch. You know, you can sell a credit spread right up here at 290 and make money and sell this expensive premium and then make money anywhere below 290. So that's what I think makes sense. I'm not prepared to jump in front of a bearish train. I'd want to see it bounce first before I'd sell the puts underneath. But right now, I think a 290 call spread would make a lot of sense. Let's just see what's there. I'm going to duplicate this trade. And I'm just going to use my scanner. It's the fastest way. And I'm going to edit the trades, calls, credit spread, Tesla, short term. Don't do a long term on this one just yet. And there's none that show up. If I don't see any, then I'll just go build it. Option chains. Let's see, when do I want to expire? 7 days. We'll look at both. Let's just do a 7-dayer. Now, if you're going to do this, right now is the time to do it because the IV's hot. The IV's hot right now, and it'll settle towards the end of the day. So I want to sell once again at 290. Am I going to get anything for up there? I don't know. Probably some, but maybe not enough. Let's see. I want at least 10% between now and Friday. So there's 290. I only see 3 cents. So I'll sell. I'm in the option chain. I'm looking at my strike prices. These are Friday options. And then I find my 290. There it is. So I want to sell the 290 and buy the one above. Let's see what we get. Probably not enough for Friday. Yeah, 1%. That ain't enough. Edit the trade. We'll probably have to go out 3 weeks. We'll go from October 7 to October 14. So I'm just price shopping right now. I want to get paid something. 5% by a week from Friday. And then if I go further out in time, I'll get more premium. Let's go to October 21. you know, when we started snipers are credit spreads, and we look for bad news or good news, in this case bad news, to keep the stock from rising. And here there's a potential to make 13.64% anywhere below 290 between now and October the 21st. That's a 3-week trade, 18-day trade in trading days, with a probability of profit of 90.7%. That's the only way I think I would trade this one for now. So let's post this one in the boards. Yeah, it's still, it's not enough money. I mean, 13% over 18 days, that's not bad with 90% probability of profit. And there's no absolute right answer. It depends on your own tastes. But that's a nice nice high probability trade, only offering 13.64% over the next 18 trading days. If you want more money, you want more return, you drop the strike. You drop the short call, maybe down to 280 or 270, and that will increase your return on investment. Okay, George, that's what I would do with this one for now.
Tesla really can run though. That's the problem.
It is the problem, yeah.
It really can run.
Here's one thing I like.
I don't think I would do that.
I don't think I would do that either. Now, if you did it though, you have 260 resistance, 280 resistance. There's also intermediaries as well, and then 290 resistance, and the 50 and the 200-day average. So this is a really good, as safe as you can get. And if Tesla does run, there'll be significant resistance for it to get through, and then this 200-day average here will be very strong. So yeah, I'm with you. I don't really want it. I want to trade it. Now, you can do this in Tom's tools too, but this is the fast way to do it. I like to look for, in Thinkorswim, it has these watch lists. And there's a watch list. If you click, let me show you what I'm clicking here. So if you, right next to watch list, if you click this, and I've got futures, my own list loaded, but if you go up here to top 10s, you can look for the train wrecks. So what are the biggest losses in the NASDAQ as we speak? And this is one of the biggest losses on Blue Apron Holdings. So this probably has bad news. And all right, I have to dig into the news. That after stock sale announcement, okay, so Blue Apron is selling shares of their own stock. That's not that's not a good sign. So there's some bad news. Selling credits on stocks like this is like, you know, shooting fish in a barrel, quite honestly. Top 10 losers on the New York Stock Exchange. This is one of my, when I was doing a lot of snipers, this is what I spent a lot of time in here looking for train wrecks, you know, ambulance chasing. And here's, I don't know, I've never heard of this company, Mondog,
Database company.
It's a database company.
Yeah.
And then I would look for bad news. I don't see any there. So there's another place to look. You can also go into Tom's tools and look for the train wrecks as well by going to, let's get to the latest date here. I think we're there. Yep. Stocks, rankers, close percent change. I want 1-day bears against everything, the whole universe. I'm going to run this scan. It's going to say, all right, for today, show me the biggest tankers, bearish stocks for today. You hit search, and this is a really fast way that everybody can use to find potential bearish credit spreads. And these are, look at this one on Hippo Holdings. Oh, what's happening? Oh, did I hit bullet? Oh, it's dropped today, but it looks like it's a buyout candidate or something, or stock split, reverse stock split. Okay, that doesn't count. This one's down 38%, but it's worthless. This stock's at 280. This stock here, Brazilian ultra short, is down after the fairly favorable election results. This stock, which is an inverse, has tanked. All right, this is 10, you know, in 30 days, it could be anywhere. So because of the second election that's coming at the end of the month, so I'd stay away from that one. But this is a place where you can look. for train wrecks and potential bear call spreads. And if you were to take a trade, let's just find one and check the news. Oh, it doesn't matter. I'm not going to worry about the price. Let's look at this one on Blue Apron. Well, we looked at Blue Apron. We checked the news. Check the news. Make sure the news is bad. And then consider a credit spread. And then you can take this list, and let's just save the top 250. I want to take the top 250 of these biggest single day drops. I save them into my stock list. And then from there, I can go looking for bear call spreads, searchers, single strategy, call credits, and then short term, and then select my stock list. And so what we're asking the software to do is, all right, these are the top tanking stocks for today. Show me, please, credit spread possibilities, hit search, and then ranked in order. Look at this one on the very top of the list. This is natural gas. 93% probability of profit to make 30% over the next 4 days. That is astronomically high. And here's a good looking credit spread on UNG. Now I would actually, in this case, we're going to do this trade. This is too good. So although we have a really high probability of profit, 93.5%. Let's check news first. I didn't do that. UNG. Stable pressure from Nord Stream had been achieved. Israeli officials in Paris talks. Future pro-share field off Lebanon. Rally. Okay. British winter likely to be challenging due to Russia, gas disruptions. Yeah, I'd have to dig in further. I don't see any solid bearish news that I can discern, at least without digging in. But I want to sell higher than here. What's really interesting is that natural gas is now below its 200-day average. The last time that happened, though, this happened. All right, so this is one of those commodities, and it's got a lot of forces operating on it. U.S. dollar demand, price manipulation, all that stuff. So we could sell at 28, but the last time it was below the 200, it took a really bullish run. I think that could happen anytime. So for that reason, I would pass on this one. All right, so that's how you can find these strategies using Tom's tools. Now what I'd like to do is talk to you. Wow, we're going to go an hour and a half today. I wasn't planning on it, but that's what's up. All right, so we got all these bear calls that are working great. They're all in profit. Currently, we're at about a 9% open profit since 3 weeks. We've got all of them are winners so far. Average risk per trade $700. Average profit. These aren't, only one of these is closed at the moment. So this will rise provided we don't get massive run-ups. So the one I want to talk about is this one. We placed this trade on the 26th, which was last Monday, a week ago. And we placed the trade. We placed this trade because of the rising US dollar and the impact of the US dollar on the price of oil. US dollar gets stronger, oil drops in price. Occidental is an oil producer, and the stock was under a lot of pressure. So we had a 7-day trade with a probability of profit of 99%. This is what happened. And I remember Dr. John was on the boards. So what happened in this case, the next day, fine. The next day, we're up 5%. We're going to make 11% if the stock stays below 63. All right, so we're playing for this. This is our max credit in the trade. We only lose money if the stock runs up hard. Now, when you trade these, the rule that I use is either buy the spread back for 10% of the original credit, which was 21 cents. So buy it back for 2 cents if you can during the life of the trade. That's going to happen between now and Friday if the stock is below this short strike of 63. But otherwise, don't do anything unless the stock closes above 63.21. This is really important with these short termers, because what happened in this case was that, okay, the stock gaps up. There was some news, the stock starts gapping up, and you're going, oh crap. Now I'm getting into some heat here. I'm down a little bit. Now, if the stock doesn't go up any further, I'll still make all my 11% minus, 2 cents. So a good, 9-10% is still available to me is if the stock doesn't go up any further. And then the next day, this happened, and the stock touched the break even. All right, so this is where I started getting some texts, and the text was, "What do I do? What do I do? It's getting hot." This is these short-term credits. You've got to be okay with this, and the only way that you're going to maintain your sanity is to be prepared to take the loss only if the stock closes above your break even. Now, at break even, at expiration is there. You break even at expiration. We've got 1 day left. Yeah, the stock, the high of the day was 63.12. It didn't even breach the upside break even, but you're down 10%. And the question always comes for everybody that does these, should I get out? Should I get out? Oh my God, if it goes up further, I'm going to lose more money. All of that stuff starts coming in. The only way that you can sanely trade these credit spreads is to detach from getting out early, detach from trying to manage the risk in a subjective way, usually based on fear of loss. And you let go and you say, I don't do anything. I don't do anything unless the stock closes above 63.21. Flat. That's it. Take the loss. Follow the rules. It's the only way. It's the only way.
We don't know yet.
Yeah.
She's at the.
Okay, we gotta you there. Okay. All right. So that was you write it out. And then fortunately in this case, the next day the stock behaved itself and this spread expired for worthless. But I'm gonna close this out. Guess how much? 2 cents. Let me back this up. I'm going too fast. I need to calm myself down. Calm down, Mikey. It's okay. So here's 63.65. All right. So we sold this 63. We bought this 65. I'll have a GTC order in. I did, and it fired to buy this back for 2 cents. We sold for 21 cents times 100 is $21 per contract. So on Friday, with your GTC, you would have been out of this trade. So I hit close for 2 cents. We would have bought back the entire spread for 2 cents. So I plug in 2 cents there, copy the contracts from above, 3 and 3. And this is a winner chicken dinner, a 7-day trade. And on this one, hit update and then go to risk graph. And on this one, we netted $57 on $500. So right around 10% profit on this trade. So that's the world of short-term credits. And you don't even want to think about trading them unless you're prepared to follow the rules I just mentioned. Simple. You want to be a system and a machine about it. Forget about getting out early. Just follow the rules. Get out if the stock closes above 63.21, and then buy back for 2 cents the instant you can. So,
can I ask why you didn't let it go to expiration?
because of our rules, because what we do is rules-based trading. Certainly, you could have let it expire, and I'm sure a lot of you did. So in practice, if you're convicted that there's no way, you wouldn't have gotten out for 2 cents here. The next day you could have. But if you're looking at the stock and you're saying, man, I just don't see any way the stock's going to move up, then you can let it expire worthless. But rules. We want to get everybody in the habit of, take your hands off the steering wheel, let it run on autopilot. Rules-based trading. Rules-based trading.
Mike,
So
there's
critical.
another risk there, and that is that in the aftermarket, that 1 hour after the market closes, you could get assigned
Mhm.
and that's close enough so that worthwhile
Yeah.
buying your way out of it.
That's
The stock
correct.
took a
Yeah.
big jump. You could get a sign, not even know it.
Yeah.
Got it. Got it.
Yeah. You want to be definitely
Good to
closed
close
out.
out.
Yeah. You got to, that's another good, and George is a short seller. He sells calls and puts and does condors as well. So he knows that very well. It is possible in post market after 4 o'clock that there's a piece of news and the stock gaps up and you could get assigned. And it's not very common that it happens, but it can happen. So yeah, there's the rule, more impetus on simply following the rules. And what it does for your psychology, Leo, and everybody else is even to this day, I've been selling credit spreads my entire trading life, 25 years. And I understand the insidious nature of, oh crap, I'm about to lose more money. Should I get out? Should I wait a day? And then when you get into that psychology, it's very stressful.
Yeah.
And when I was looking at this, like, man, yeah, it could close about 63.21, but I'm going to wait until it does. And I'm going to go look at something else and forget about it. Detach. Let the rules run the show. And and then when you take those rules, everybody, and you back test them, and just these basic rules, you'll see you could literally back test 100 short-term credits using the rules I just disclosed. And I've had many people do it, and I'd say roughly 75% win rate and an APL in the neighborhood of 20%. If you follow the rules, detach, let the plane fly itself, and get the hell out of the way.
Yeah.
And that's your psychology that you want. It's detached, and you're allowing and surrendering to the flow of the markets. We don't know what's going to happen tomorrow. And so let's not, let's just not look there. Let's go ahead and just follow rules. And it's the one thing people don't want to do. It's crazy. I mean, I understand too. I want to break the rules all the time, but I don't anymore. I used to, but I don't. And that's where your consistency lies, for sure. Okay. Let's see. So our portfolio is doing really well. We have a Qualcomm long-term credit spread that is nearing. Yeah, we're out of this one. So Qualcomm, we placed this trade on 9/12, which is what, 2 weeks ago, and the stock we were right. Qualcomm, chip company, U.S. Trade war with China, and the stock further tanked. This was a 2-day winner, although it was a 65-day trade roughly. So this is the key here. And you want to be taking these off, in this case, for 13 cents. All right, we got $1.34 times 100 is $134 credit. And so we want a GTC to take this off for 13 cents. And you can see right here, the ask prices are right around 14 cents. So this will come off today. That's a winner chicken dinner. And pretty much across the board, that is what is up. We have a long-term bear call on the IWM. All of them are nearing credit, even the long-term ones after just a few weeks. So you want to take, let me illustrate this quickly. You got to do this. You might say, well, hell, in 49 days, there ain't no way Qualcomm's getting up here. So I'm going to let it expire. And while you're waiting for it to expire, you got $866 locked up. So you can make 13 more cents, 13 more dollars. You're waiting for 13 more dollars to materialize while you're locking up 866. This is really, really critical. You take these off at 10% and then go take that 866 and find another one and make more money on your margin requirement. If you do this with long-term credits, your average trade time, hold time will be about 45 days, 30 to 45 days. And if you do that over time, your average APL with long-term credits will be in the neighborhood of 11%, 10 or 11%. And this is the environment we want to be doing these long-term bear call spreads. If you want to go looking for yourself, I've demonstrated some ways to use the credit spread scanner. Gerardo's tagging everything. So when you go back to your boards and you go to your dashboard, you'll see the recording here coming up. And you can go right to the recording with the link, Fathom link with all the timestamps, and you can digest what I've just covered here. All right. So we've got an hour and 35 minutes. I think it's time for me to stop and answer any questions that anybody has. Just checking the chat box here. Andrew got filled at 11 cents. Bet if you wait, 12 cents will happen. Yeah, I agree, Andrew. You like that trade, Andrew? He's smiling.
Yeah, I did. I looked at that. I looked at it and I said, yeah, that'll take even at 11 cents.
I've been sucking on mint, so my lip gets white. How embarrassing. Kathy, how are you doing? What's that, Andrew?
I figured that was the lights and the camera angle.
Yeah. Yeah, I've had this cold for like over a week now, and it's not quite gone yet, but hopefully soon. All right. All right, everybody, that's a wrap for today. If you're in earnings, we'll get back together at 3 p.m. Eastern. We're going to do a Lockheed Martin straddle, red wave straddle. Hey, Johnny, what'd you end up doing with the Oxy trade?
I just let it expire.
All right.
Yeah.
Got a little hot there the day before, didn't it?
Yeah, but it was hotter with Nike. Anyway.
Yeah, awesome.
So let me ask one question. Is there a Dow trade that's going on?
A Dow trade? Not that we have.
Okay.
Dow Chemical?
Yeah.
Let's take a quick look. It's bouncing a little bit. Dow is one of the Dow Jones stocks. It's quite, well, I was going to say quite stable, and it's moving with the markets, but it's up to date with the rest of the markets. So let's take a quick look at how the markets are behaving, and we'll wrap for today. I'm going to go into my futures list here. Let's just see. I didn't look at Bitcoin today. Bitcoin's, break out the paddles. Nowhere on Bitcoin at the moment. The VIX futures are down a little bit with the rise in the market. The S&P 500 anyway. That's a pretty healthy little bounce there. But, there's a few of them. That's going to be one of them. And I still think downtrend from here. All right, everybody. Thanks for joining. And we'll see a lot of you in a few hours on Earnings Live. Pura vida. Much love.
Thank you very much.
Good day.
Thank you. See you later.
See you later. Have a good day.
Bye.
Bye.
Thank you.